The rapid rise of SoFi stock has surprised many investors, with most now wondering where the stock price will go from here. Is there room to go higher, or is the price about to pull back? In this video, I'll analyze SoFi's recent performance and market trends, examine key fundamental data which will allow me to model a price prediction for 2027. Now, if you're holding SoFi right now, or you're considering investing in SoFi for the long term, watch this video until the end, as you may be surprised in this stock's growth potential. Hi, it's David here from Trade Pro, and on this channel I help you understand the market and win more trades. Let's start by looking at SoFi's company profile and recent earnings. SoFi Technologies provides various financial services in the US, Latin America and Canada. It operates through three major segments: lending, technology platform, and financial services. SoFi is a member-centric, one-stop shop for digital financial services that helps members borrow, save, spend, invest, and protect their money. In the recent Q3 earnings call, Anthony Noto, CEO of SoFi, said, "This quarter was the strongest quarter in our history. Our results reflect how SoFi is consistently achieving durable growth, how our innovation and brand building are attracting more members and clients to our platform than ever before, and how we're delivering strong and improving returns." SoFi reported a number of key financial achievements in the third quarter of 2024, including total GAAP net revenue of $697 million, which increased 30% relative to the same period last year. Third quarter record adjusted net revenue of $689 million grew 30% from the corresponding prior year period of $530 million. Third quarter record adjusted EBITDA of $186 million, a 27% adjusted EBITDA margin, increased 90% from the same prior year period's $98 million. All three segments achieved record contribution profit in the quarter. SoFi reported its fourth consecutive quarter of GAAP net income, achieving $60.7 million in the third quarter of 2024. Now, in order to build an objective price prediction, we will need to pull key metrics from SoFi's fundamental data. Firstly, I'm going to need SoFi's forward price to earnings ratio, which, as of this recording today, is 62.1. The next number I'm going to need is SoFi's current share price. As of this recording, it's trading at $14.11. And you can see the rapid rise of SoFi's stock price since August 2024, jumping from around $6 per share all the way up to $14 per share. Next, I'll need SoFi's earnings per share expectations over the next several years. So for the current financial year, 2025, the current estimate is that it will deliver earnings per share of 29 cents. I'm also going to need SoFi's growth estimates over the next 5 years, so that I can make my prediction of where SoFi's earnings per share will be in 2028, based on the forward price to earnings ratio. As of this recording, Wall Street's estimate for SoFi's 5 years earnings per share growth is 50.8%. Now, this growth estimate is an analyst consensus, meaning that some analysts may think it's going to be higher and some think it's going to be lower. Now that we have our key fundamental data, we can now attempt to model a future price prediction based on this data. So firstly, we have SoFi's earnings per share expectations of 29 cents for 2025, and the 5-year growth rate that I took from Yahoo Finance from the Wall Street analysts, which is 50.8%. So by applying the growth rate of 50.8% to the EPS figure over 3 years, we can calculate SoFi's earnings per share of 99 cents for the year 2028. Next, looking at the second table on the right, you can see I've brought over the 99 cents EPS for 2028 and then multiply that with the forward PE multiple of 62.1. So this gives us a predicted stock price of $61.74 by the end of 2027. So if everything goes as expected with SoFi's business growing as forecasted, And based on the data we have available today, the stock price could rise to $61 per share by the end of 2027. And this would be a strong 340% increase compared to its current share price today of $14. As you can imagine, I think most SoFi stockholders would be very happy with this return over the next few years, more than tripling their investment in just 3 years. However, things could go much better if the forward PE rises to 70. In this scenario, SoFi's stock price could increase to $69 per share. However, if the PE were to decrease to 30, the stock price could rise, but only to $29 per share. So even in the worst case scenario, SoFi still offers a good return over the next 3 years. On October 14th, SoFi announced a $2 billion loan platform business agreement for personal loans with funds managed by the Fortress Group. CEO Anthony Noto said in a press release that the agreement will help it diversify toward less capital-intensive and more fee-based sources of revenue. SoFi has grown its banking presence and significantly increased its deposit base over the past few years, and its earnings continue to improve as it pulls on multiple growth levers across its business. One major factor driving SoFi's recent price surge is the Federal Reserve's recent rate cut. A reduction of 0.5% in interest rates has lifted a significant burden for SoFi, whose lending business had been feeling the squeeze of high interest rates. With the cost of borrowing set to lower, consumer demand for loans is expected to rise. This improved rate environment positions SoFi to attract new customers and is likely to support accelerated growth across its lending portfolio. Quarterly financials for SoFi have been consistently positive, further boosting investor confidence. For example, in the recent Q3 report, the company achieved a record adjusted net revenue of $689 million, which is a growth of 30% year over year. Financial services made up over a third of this revenue, growing by 102% compared to the same period last year. SoFi's tech platform also grew with a 14% revenue boost compared to Q3 last year, driven by a growing pipeline of clients looking to modernize their own platforms. What is also positive is that SoFi's revenue is diversifying, with non-lending segments of the business now making up 49% of total revenue, increasing from 39% compared to last year. And this shift towards capital-light, fee-based income streams reduces SoFi's risk exposure and aligns with its long-term growth strategy. SoFi's customer base also continues to grow rapidly. In Q3, the company added 756,000 new members, a 35% increase year over year, bringing its total customer base to 9.4 million. Similarly, SoFi's product offerings rose by over 1 million, up 31% year over year, totaling 13.7 million products. SoFi's cross-selling strategy has been particularly effective. Nearly a third of new products were opened by existing members, while 20% of new members opened a second product within their first 30 days. This behavior underscores SoFi's success in building an ecosystem that encourages customer loyalty and deepens engagement. A key highlight of SoFi's business strategy is its focus on capital-light, fee-based revenue streams. For example, in Q3, fee-based revenue totaled $174 million, making up about 25% of SoFi's adjusted net revenue, which is 65% year-over-year increased. This shift has been supported by record growth in SoFi's loan platform business and higher interchange revenue, which doubled over the past year. Despite the challenging environment, SoFi's lending segment achieved record results. The company reported $6.3 billion in total loan volume and $392 million in adjusted net revenue, marking a 14% year-over-year increase. Personal loan volume hit a new high at $4.9 billion, up 26%, including $1 billion originated on behalf of third parties for its loan platform business. Home loans also saw substantial growth, with total volume up 38% and home equity loan volume rising by 44% from the previous quarter. With deposits totaling 24 billion in Q3, SoFi has built a stable, cost-effective funding source. Notably, nearly 90% of these deposits come from direct deposit customers, who tend to be highly loyal. This solid deposit base enables SoFi to fund a more significant portion of its loan portfolio at a lower cost, which enhances profitability. So based on all this data, where do I think is the most likely outcome for SoFi's stock price by the end of 2027? Based on the fundamental data presented, I think the most likely stock price is somewhere in the range of $50 to $60 per share, offering strong growth when compared to its current share price. This is why I think overall SoFi stock is a solid buy for long-term investors. If you're keen to invest in other growth tech stocks like SoFi, check out this video here where I share my top 10 reasons to buy Nvidia. Or if you want to learn more about risk management, including position sizing, portfolio construction, and stop orders, watch this video here. See you there.